U.S. stocks closed mostly lower in choppy trading on Wednesday, following data that showed more weakness in the U.S. labor market. The Dow ticked up marginally, while the S&P 500 and the Nasdaq both ended slightly down. A report from the Labor Department showed job openings fell to a 3.5-year low in July, likely strengthening the case for an interest rate cut from the Federal Reserve after its policy meeting later this month. This comes ahead of August's non-farm payrolls released Friday, which is also expected to show further cooling of the labor market. Dan I is Chief Investment Officer at Fort Pitt Capital Group.
We think it's important for investors to really realize that we don't get to the point where, the Fed can cut interest rates or normalize interest rates, where we can get inflation back in the box, back in line with long-term trend levels if the economy is still growing at 3+%, if we're still adding 250, 300,000 jobs to the payroll every month. So we think we're in this last leg of the normalization process that frankly really needs to happen, and a slowing economic backdrop is certainly part of that process.
Stocks on the move included Nvidia, down more than 1.5% a day after a roughly 10% drop. The U.S. Justice Department sent a subpoena to the AI chip firm as it deepens its probe into the company's antitrust practices, according to a report. Fellow chipmaker Advanced Micro Devices rose nearly 3% after it named a former Nvidia executive as senior vice president of global AI markets. Stocks of other tech firms, including Apple and Amazon, slipped, while Tesla shares rose more than 4%. One non-tech stock of note, Dollar Tree, which plummeted more than 22% after the discount store operator trimmed its annual sales and profit forecasts.